In the last video we tore down the wall of complicated financial jargon. We talked about the mechanics, the bedrock. But knowledge without action? That is just noise. Today we are taking the next step. My name is Arthur Leo Stone, and in the next 12 minutes I'm going to show you how to build a portfolio the old money way. No hype, no gambles, just the exact mechanics to make your money work while you sleep. Before we dive in, if you are serious about taking control, you need to know exactly where you stand. I have created a free wealth audit checklist that helps you map out your financial reality. It is the exact tool I use to keep my own progress on track. Click the link in the description to get your copy and start calculating your true wealth score today. All right, let us get to work. When people hear the word portfolio, they often picture a wall of monitors on Wall Street, frantic traders, red and green numbers flashing by. Forget that. That is not investing. That is a casino. And let me tell you, the house always wins in a casino. We are not here to play their game. We are here to build a system that works, regardless of what the talking heads on the news are screaming about today. A real investment portfolio is just a collection of assets that you own. Think of it like a business you are building for your future self. And just like any business, it needs a plan. You would not build a house without a blueprint, so why build your financial future without one? Most people spend more time planning a weekend vacation than they do planning their retirement. That changes today. In the U.S. markets, the most powerful tool for a regular person is the index fund. Think of an index fund as a basket. Inside that basket, you have tiny pieces of hundreds, maybe thousands, of the largest, most successful companies in America. When you buy one share of an index fund, you are not betting on one company, you are betting on the American economy as a whole. You are betting on the innovation, the grit, and the productivity of the entire nation. And here is why this is the old money secret. When you own the whole basket, you do not have to worry about one company failing. If one company struggles, the others pick up the slack. It is the ultimate form of diversification. It is protection through inclusion. Now you have probably heard of the S&P 500. That is the gold standard for these baskets. It tracks the 500 largest publicly traded companies in the United States. Historically, this index has delivered strong, consistent growth over the long term. It has survived wars, depressions, and recessions. It keeps growing because the companies inside it are constantly adapting, constantly innovating, and constantly finding new ways to generate profit. But here is the trap. The trap is thinking you need to be an expert to start. You do not. Most people get paralyzed by analysis. They think they need to read every financial report, follow every market trend, and predict the next big thing. That is a full-time job for people who usually end up failing anyway. You do not need a Bloomberg terminal. You do not need to read every financial report ever printed. All you need is consistency. We are going to talk about a concept called dollar cost averaging. This is the bedrock of long-term wealth. Imagine you have $200 to invest every month. Instead of trying to guess whether the market is up or down, which, let me tell you, even the experts get wrong, you simply invest that $200 at the same time every single month. When the market is up, your $200 buys fewer shares. When the market is down, your $200 buys more shares. Sounds simple, almost too simple. But over time, this smooths out the volatility. It takes the emotion out of the equation. You stop trying to time the market and you start letting the market work for you. And that is the secret to building wealth while you sleep. It is not about having a mountain of cash today. It is about having a consistent stream of fuel for your engine. The more consistent you are, the more powerful that engine becomes. And the more powerful the engine, the faster you get to your destination. You need to look at this not as a chore, but as an automated commitment to your future. Every time you see that money leave your account, you are not losing it. You are sending it out to work for you. You are putting a soldier on the front line of your financial independence. Over 20 or 30 years, those soldiers add up to an army. That is how you build a legacy. That is how you secure your retirement, and that is how you finally stop worrying about the bills at the end of the month. We were talking about the power of the index fund. But an index fund of stocks is only half of the story. If you want a portfolio that lasts, you need balance. You need stability. If stocks are the engine of your portfolio, bonds are the brakes. Now, I know what you are thinking. Bonds sound boring. And you are right. They are. They do not get the headlines. They do not make people rich overnight. But in the world of old money, boring is exactly what you want. Boring is predictable. Boring is reliable. A bond is essentially a loan. You are lending your money to a government or a corporation for a set period of time, and in exchange they pay you interest. You are the bank. You are the one collecting the payments. Why include them in your portfolio? Because when the stock market goes on a roller coaster ride, and it will, bonds tend to stay steady. While stocks are busy swinging wildly, bonds are doing the quiet, unglamorous work of protecting your capital. They act as a shock absorber. They help keep your nerves calm so you do not do something foolish like selling when the market is down and locking in your losses. Consider this. During the worst market crashes in American history, while stock investors were seeing their portfolios evaporate, bondholders were seeing their values remain relatively stable, or in some cases even rise. That is the safety net that allows you to sleep at night. That is the security that keeps you from panic selling at the absolute worst possible moment. Your target balance between stocks and bonds depends on how much time you have until you need that money. This is what the experts call your risk tolerance. If you are young and have decades to go before you reach your goals, you can afford to hold more stocks. You can handle the volatility because you have the time to wait for the recovery. But if you are closer to retirement or if you are saving for a house you need to buy in 5 years, you will want more bonds to protect what you have already built. You want to ensure that when you go to withdraw that money, it is actually there. Think of it like a vehicle. You wouldn't drive a sports car at top speed on a winding, mountainous road without high-quality brakes. Stocks are your speed, bonds are your control. Without the brakes, you are just an accident waiting to happen. But remember this, it is not about timing the market. It is not about guessing when to buy and when to sell. It is about time in the market. The longer you leave your money invested, the more powerful that compound interest engine becomes. Now let us bring this all together. You have your assets. You have your index funds. You have your shock absorbers. You are contributing consistently through dollar cost averaging. You have built a machine that works for you 24 hours a day, 365 days a year. It does not take vacations. It does not get tired. It does not ask for a raise. It just works. It is the most loyal employee you will ever have, and it never complains. But I want to give you one final, crucial piece of advice. And it is the one thing that separates the people who actually build wealth from the people who just talk about it. It is patience. Compound interest is a miracle, but it is a slow one. It does not happen overnight. It happens over years and over decades. If you check your account every single day, you are going to drive yourself crazy. You will see the fluctuations. You will see the headlines. And you will be tempted to tinker. You will be tempted to move your money because the news told you the sky is falling. You will be tempted to switch strategies because your cousin told you about a hot tip on some speculative asset. Do not tinker. Leave the machine alone. Let it run. True wealth is not built in a day. It is built in the decades you spend ignoring the noise and sticking to the plan. You have the foundation now. You have the tools. You know how to build the portfolio. The only thing left is to start and then stay the course. Most people fail because they stop. They start strong but they get distracted or discouraged or bored. The people who reach the finish line are not the smartest people in the room. They are the most persistent. They are the ones who treat their finances with the same respect they treat their health or their career. So, I am asking you to make a promise to yourself today. Make the commitment. Set the automation. Ignore the noise. And trust the process. You are doing something that 99% of people are too scared or too lazy to do. You are building something real. Something that can outlive you. Something that can change the trajectory of your entire family tree. We have covered a lot in these last 2 videos. You have moved from being a passenger to the driver's seat. You are no longer on the outside looking in, you are in the room. You have the vocabulary, you have the mindset, and now you have the blueprint. If you found this helpful, do not stop here. Click the link in the description to grab your free wealth audit checklist. And if you haven't yet, subscribe to the channel and turn on notifications. We are going to go much deeper into specific asset classes and the mechanics of retirement accounts in the videos to come. We are going to look at how to protect what you have built and how to optimize your strategy for the long haul. We have only scratched the surface of what is possible. There is so much more to learn, and I am going to be here every step of the way to ensure you have the clarity you need to succeed. Share this with someone you care about who is ready to stop guessing and start controlling their future. Thank you for being here. Thank you for doing the work. My name is Arthur Leo Stone, and I will see you in the next Master Your Money video.